Thanks so much for tuning into this earnings conversation with Mr. Atul Goyal of Brigade Enterprises. An over 125% revenue jump as things stand doesn't usually happen, and as a result of which the markets are rewarding the performance as well. Let's get in Mr. Goyal to talk about how he thought of the quarter and does this set the tone for the rest of the year as well. Mr. Goyal, great having you. Thanks for joining in. Hope all is well.
Thank you, Neeraj. Yes, I'll just describe where the company deals in. Company deals in residential, commercial, and hospitality. And if you see, when the pandemic came, the two things which market were worrying about, what leasing segment, of course, and the hospitality segment, and we had a very, very bad impact on our numbers. Reason being, whatever leased was going perfectly, you were getting the rentals 99%, but new leasing was a challenge. But today, if you see the latest report, there is a 18.5 million square feet of leasing which has happened in India, and out of that, 5.6 million is in Bangalore. Bangalore is the highest leasing which has happened. So this is all a credence that things are looking back, and we are also very, very hopeful that we should be able to lease all our lease project, which is mainly Brigade Tech Garden, in this year. So we have already done 0.4 million, but the best turnaround has been in hospitality. We have been incurring losses. If you see, there is a last quarter, there is an EBITDA increase of 63%. In fact, we have achieved break even after charging a depreciation to the revenue. So that is a very, very good. Of course, that says that all cash positiveness is there. So, and we are able to pay our debt, which is a very, very big comeback, which was a challenge, and it would have been a big challenge if ECLGS was not given by the government. So, market is coming back. Real estate has been continues to be on the up cycle. We had done 4.75 million last year, and we would like to do more than that this year also. We have already done 1.12. But yes, there is a word of caution also in real estate because home prices are rising. Your even home loan rates are rising, and I don't know how the economy will behave. But we are still hopeful that we should have a very good run in 23-24 as per our estimates.
Okay, let's start off with the tail first, Mr. Goyal, and then move on to the head. Hospitality. And whether it be multiplexes or the hotels or otherwise, I see across the board in Q1, most companies exhibiting stellar growth. In some cases, the unit metrics are better than pre-COVID as well. And there is hope that this may well continue and actually prosper in the quarters to come. So what's your sense after putting in the performance that you put in quarter one? Do you think the tailwinds stay intact for the rest of the year, or do you actually believe that it may become even better as the year moves by and we approach the festive season?
I think it should move better. There are 2-3 reasons behind that. A, corporate travel is back now, and that's why all these business hotels are doing well. Secondly, people are again wants to go out, and now they are visiting various places, and I think that is increasing the business. Third thing is that the hotel as such, if you see, many people have gone because of the pandemic, where they could not sustain the interest and the loan which he had taken on the hotel, and supply has become very, very limited. If you see today, there's no new deal which is happening in hotel. So existing hotel will benefit from that. That is true, and that is what we are seeing. And fourth and the last thing is, hotels have understood that they have to be cost conscious. Before pandemic, every hotel was spending much more what they are supposed to do. And I think today people have understood, hoteliers have understood that they have to be cost conscious to become profitable. And I think
that's true.
This is a very, very big learning which hospitality industry has learned, and I think this is going to stay going forward.
So ARRs are at 120% for example, pre-COVID levels, if I'm not wrong. You reckon they will become even better?
They should. Actually, if you see, we have got 8 hotels. Out of that, 6 hotels have crossed ARRs pre-COVID levels. It's only 2 hotels one in Kochi and one in Gujarat, where Gift City, Gujarat, where these are new hotels and it will take time to stabilize.
Okay.
There only we couldn't surpass the pre-COVID level. Otherwise, each and every hotel has surpassed the pre-COVID level of ARRs.
Okay. Now, in your release for commercial space, you've spoken about how that collections have remained stable and the demand for the next 2 quarters is promising with active inquiries for over 1 million square feet across properties. So now tell us, how is this piece moving from where it was, say, 2 quarters ago? And what does this active conversation mean for how much gets leased out and what could it do to lease revenues over the course of the year?
So I should say it will, we have done already 0.4 million this quarter. Of course,
Right.
3 million was in Brigade Tech Garden, 1 million was in Gift City. There is a very good traction. I think many multinationals are looking for office lease today. And they see that it takes time to close the transaction with a multinational, because they're people from outside country, they come and visit and then they finalize after discussing with the Indian office. So it takes time, but we have a very, very hot pipeline of 1 million, and we can say that, and we have targeted that whatever is the balance number in Tech Garden, we'll close it. It's around 1 million, and of course in Chennai is around 0.48. So we will try to close that. 2 quarters before, I think we were just seeing to it that our rental numbers are being invoiced and collections are coming. That is what we were doing, sustaining ourselves. But now things are looking better. And I think one of the, and both these are SEZ, and there is going to be a change in SEZ policy also. That is what government has been indicating. If there is a change in SEZ policy, leasing will be much, much faster, because if you see a non-SEZ leasing has been very, very fast, all in Bangalore, all over India. So once they change the SEZ policy, even SEZs will do very, very well. So we are very hopeful that we should complete our leasing. As for the we are doing around 450 to 500 crores of rental. I think we should go to around 650 crores or so in commercial rental by this year end.
By this year end, okay.
Yeah.
Oh, that's interesting. Okay, great. So good going there. The other piece is, of course, how do you expect, as you mentioned, there's a word of caution there with rising rates, etc. Will it make a telltale difference, or would 100 basis points or thereabouts on the base that we are at will not create havoc for demand? What's your sense? And therefore, how do you expect the core real estate segment to behave over the course of the next 3 quarters?
See, it's very difficult to say, but I'll just put before that there has been a lot of consolidation in the market today, and only big developers, or I should say graded developers, are able to sell their demand in the market. So customers are only coming to them, so their market share has gone up, and that's why you see that sales of each and every big developers are going up. I will talk about southern market. See, southern market is dominated by ITS people, and yes, they have seen a very good hike in their salary. There has been an increase in affordability there. So my sense is that it should not affect much in the demand of the real estate house, in the residential houses, because everybody today who is staying in rent, or millennials who wants to buy new home, this is the right time they are doing it. It will the rising home loan rates will have some dampener. I don't say that, but we'll see. But we are hopeful that we should do very, very well going forward as well. And we are in mid-income housing in the range of 55-60 to 1.5 crores. And if you see recent report, 65 to 68% sales are in mid-income housing. So we think we are at sweet spot, and we should do well.
You won't need to reduce the prices in order to keep the final ticket price intact, or would you do that?
Very good question. See, ticket price and sale price is different. If you want to keep a ticket price at the same line, you can reduce a bit of the area and you can still go into the same ticket price. So it all depends how market is looking at it. I'll tell you one example in Hyderabad. when we were launching our project, 2 million project, we had done it affordable housing. But by the time pandemic came, and we again went to the drawing board, because demand suggested that people are looking for bigger houses, and we made all bigger houses, 3-bedroom houses there, and it had sold very, very well. So you need to be very in constant touch with the market and see that how demand study is there, what customers are looking for it. And today, I will say that developers are not launching big projects at a go. They are launching tower by tower, because RERA, you can take tower by tower, and they gauge the demand as to how demands are there in the market, so they correct their construction or their approvals based on the demand which is there in the market.
Got it. Okay, so effectively you're saying you may not need to really tinker with your inflow of revenues, because there could be a play out there in terms of reducing the size of the flat in order to keep the ticket prices going. You won't need to reduce the average selling price.
Yeah, definitely. We can do that. Affordable housing at 45 lakhs, if you're able to sell it, is only that. But obviously now affordable housing has not become affordable because of the GST issues which have been created by the government. But it was a very good play. That is how you were able to sell at 45 lakhs. Today, it is not possible to do that.
Got it. My final question, in order to meet all of these growth targets that you currently have or will have, would you need to do any kind of equity fundraising, or you would be cash flows and internals would be self-sufficient?
No, we don't think any equity raising will be required. We have already done 500 crores in last June. We are sitting on a cash pile of 1600 crores today. So it's a big driver. And I think seeing the market and the land buying which we are doing, I think internal accruals are enough. If you see, we are able to sell 100% of our stock today. I'm sitting on 2200 of extra cash in residential only. So there is a lot of options which are there today. So I don't think so we'll be going for any fundraise in near future, maybe in next 1 or 2 years.
Got it. Mr. Goyal, lovely talking to you. And I'm glad that what you predicted about a few quarters back is now fast turning out to be true. All the best for many more successful years.
Thank you, Neeraj. Thank you.
The pleasure was ours. Viewers, thanks for tuning in.